Every single year, millions of people sit down to file their taxes and just pick a status like they're choosing a seat on a plane. Window, aisle, doesn't matter. But it absolutely matters, because the wrong choice can cost you hundreds, sometimes thousands of dollars that you should have kept in your pocket. Think of your filing status like a VIP wristband at a concert. It decides which rooms you get access to, what discounts you qualify for, and how much you have to pay at the door. The IRS has 5 of these wristbands: single, married filing jointly, married filing separately, head of household, and qualifying surviving spouse. Let's start with the obvious one, single, which sounds simple but trips people up more than you'd think. If you're unmarried and don't support any kids or dependents, you're single, you file single, end of story. Now married filing jointly is where things get interesting, because 2 incomes combining into one return sounds like it would hurt you, but it usually helps. The standard deduction for married filing jointly in 2024 is $29,200, which is literally double the single filer's deduction. So the math tends to smile at couples. Married filing separately, though, is the rebellious sibling. Nobody talks about it Thanksgiving. It exists for a reason. Sometimes one spouse has massive medical bills or specific deductions that work better alone, but most of the time, filing separately actually raises your tax rate and cuts you off from credits you'd otherwise get. Here's where people really leave money on the table. Head of household is one of the most misunderstood statuses in the entire tax code. If you're unmarried, you paid more than half the cost of keeping up a home, and a qualifying person, like a child or dependent parent, lived with you, you probably qualify, and that means a bigger standard deduction and lower tax rates than plain old single. The difference between filing single and head of household might not sound dramatic until you realize the head of household standard deduction is $21,900 versus $14,600 for single filers. That's $7,300 of extra breathing room that a lot of people are just accidentally leaving behind. There's also the qualifying surviving spouse status, which is basically the government saying, "We know you just lost someone, here's a little grace period." For 2 years after your spouse passes, if you have a dependent child, you can still use the married filing jointly tax rates, which are significantly better than filing single. The sneaky truth about all of this is that your status isn't just about your relationship. It's about your household, your money, and who you're responsible for. The IRS doesn't care about your Instagram relationship status. They care about where you slept, who you fed, and whose bills you paid. One of the most common mistakes we see is someone going through a divorce in December and just assuming they're single when they might still legally be married on December 31st, which is the only day that matters to the IRS. Your status is determined by where you stand on the last day of the year, not where you started. Another one that stings, a single parent automatically assumes they have to file single, not realizing head of household exists and was literally designed for their situation. The tax code, for once, actually tried to do something nice here, and we just collectively forgot to read the manual. The cool part is that once you understand these categories, you stop feeling like taxes are this mysterious punishment and start seeing them as a system you can actually navigate. You don't need a finance degree. You just need to ask yourself a few honest questions about your living situation, your dependents, and your marital status at year-end. Preparation is really the whole game here. Not genius, not luck, just knowing your options before you sit down in front of that form. Spending 15 minutes understanding your filing status could realistically save you more per hour than almost anything else you'll do this week. The irony is that the IRS literally publishes all of this for free, and yet billions of dollars in refunds go unclaimed every single year because people don't know what they qualify for. We're essentially leaving our own money in a parking lot and walking home. If you're curious about what else we break down on this channel to help you keep more of what you earn and stress less about the stuff that seems complicated, go check out our links in the description.